Google just reported, and this was a solid quarter. But there's one number that's spooking people. Let me break down what actually happened and what matters. Total revenue came in at $113.8 billion, up 18% year-over-year and about $2.4 billion above street estimates. EPS was 2.82 versus the 2.63 estimate. Net income hit $34.5 billion, and for the first time ever, annual revenue exceeded $400 billion. These are strong numbers. The beat was driven by the two businesses that matter most. Search revenue came in at $63 billion, well above the $61.3 billion estimate. Management said search saw more usage than ever, with AI driving an expansionary moment. But the real standout was cloud. Cloud revenue hit $17.7 billion, up 48% year-over-year and almost $1.5 billion above expectations. That's a massive acceleration from the 35% growth the street was modeling. Enterprise AI adoption is very real. Not everything was perfect. YouTube ads came in at $11.4 billion versus the $11.8 billion estimate. That's a miss. Subscriptions also fell short at $13.6 billion. Management blamed some ad softness on tough comps from last year's political spend. But here's the thing, search and cloud are the businesses that drive the story. YouTube and subscriptions are secondary. The core is performing. Free cash flow was an absolute blowout, $24.6 billion versus the $14.3 billion estimate. That's a 72% beat. The balance sheet here is a fortress. On AI, the Gemini numbers were impressive. The Gemini app now has over 750 million monthly active users. Their models are processing over 10 billion tokens per minute. And they cut Gemini serving costs by 78% over the course of 2025 through model optimizations. That cost curve is critical for margins going forward. Now here's what's got people nervous. Google guided 2026 CAPEX to $175 to $185 billion. The street was expecting $120 billion. That's roughly double their 2025 spend. It's a massive number. But it also signals that Google is extremely bullish about its revenue prospects. Unlike OpenAI or Anthropic, Google doesn't need to raise capital. They can fund this internally. That's a major competitive advantage. So here's the bottom line. The two most important businesses, search and cloud, both performed extremely well. The CAPEX guide is huge and people are spooked, but Google is in a position no other AI company is. The stock is down a couple percent, but I think that's an opportunity, not a warning. That's the recap. Subscribe for more earnings breakdowns. I'll see you in the next one.